This week could be a market mover. CPI data drops Tuesday and Jerome Powell hits the mic Thursday. Two events that could shake things up in a big way. We're also diving into a potential US-China trade breakthrough, what's next for Tesla, and why Walmart's earnings could be a game changer. Plus, we'll break down how the markets finished last week and what you need to be watching heading into this one. If you're into market news, analysis, and real-time takes, smash that like button, hit subscribe, and follow wherever you get your podcasts. Now, let's get into it. To Stockcast, the market show for the average Joe, whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host as always, Brandon Shar. Happy Sunday. And boy, oh boy, we have a jam-packed episode, lots to get into. So let's kick it off. Before we look ahead, to the week ahead, that is, let's quickly recap how the markets finished last week, because understanding where we are coming from might help us get an idea of where we are headed. Let's take a look, for those on YouTube, of the heat map for the S&P 500 as of close last Friday. For those listening on iTunes or Spotify, it's really a mixed bag. You had some green, you had some red. Technically, the S&P finished the week down. I believe I saw somewhere it finished so far for May, we're up 1.6%. We are down a little more than 3% for the year. And basically taking a look at the chart here for the S&P 500, SPX, the index on the daily chart. As of right now, if you're looking at a daily chart, we are below the 5,700 level, which is really an important level. We are above the 50-day moving average. We are hovering below the 200-day, which is currently sitting at 57.48. We closed Friday at 56.59. So really, Friday technically was a red day for us. But overall, if you look basically since, I would say April 7th or so, we have been steady climbing, higher lows, and, overall not looking too bad considering the shock that the market got at the beginning of the month of April, I should say, with the tariff news. Now, the interesting thing when you're looking at SPX, if I were to pull up a weekly chart of it, we are technically below the 50-day moving average on that. We tapped it actually last week and the week prior. We did not get a close above it, though, if you're looking at weekly candles, right? And so this week, obviously, it's going to be important to see if we can get some more momentum to the upside and get above on the weekly chart that 50-day moving average. And obviously, that would mean us getting above 5,700. That's a really important level. So that's what I'll be looking at. I don't really see a ton of resistance for SPX if it is able to get above 5,700. You got a little bit at, I would say, 5,770 there based off of this weekly candle back at the beginning of January. But beyond that, these are just some of the levels that I'm watching. Got one up here at 59.05. So really curious to see what we're able to do this week. Quick check-in on the NASDAQ 100, tech-heavy NASDAQ, and we are toying with that 200-day moving average on the daily chart here. So we obviously finished red on Friday. But again, if we get some bullish news as it relates to tariffs and trade policy, we could see a push above this, and that could be a catalyst in and of itself. Quick check-in on the Russell 2000 small caps, not looking too shabby here either. We are above the 50-day moving average, which is great to see. And we got a ways to go before we even look at the 200-day moving average there. So That's what the last week looked like. Quick check-in on the VIX. The VIX continues to sell off, which is good. I mean, it's trending down. It closed at 21.90 on Friday. So technically still above 20, showing some elevated volatility, of course, but it is great to see it continue to slide down here. I would actually be interested in calls on the VIX, depending upon how the next couple days shake out, because I think we are unfortunately overdue for a bit of volatility, which of course would bring VIX up. But overall, if you're in the bull camp and you're looking at this VIX chart, things are starting to or try to normalize a bit. So you want to see the VIX skip below 20. So that's where we are at right now as far as the markets from the week prior. With that context in mind, let's take a look at what's coming, right? So it really starts with two of the biggest potential catalysts. So we get CPI data on Tuesday, and Jerome Powell is speaking on Thursday. Two big events kind of in the mix of some other things that will be coming this week ahead. So let's take a quick look at the economic calendar for the week ahead. We get a lot of data this week, folks, so definitely something to pay attention to. As far as Monday, not a ton happening. You got a Fed speaker, Kugler, at 10:25 a.m. That's about it, though. You got some bill auctions, nothing too crazy. But Tuesday, May 13th, we will get the CPI report. For those who don't know, CPI is a great gauge on inflation. The Core Consumer Price Index, CPI, measures the changes in the price of goods and services, excluding food and energy. So taking those two things out, the central banks pay very close attention to this figure in its role of maintaining price stability, because the Fed believes that core inflation is a better gauge of underlying price pressures. It's more closely watched than overall inflation, which tends to be more volatile, according to Bloomberg. So we are going to get a CPI report that comes out on Tuesday, May 13th, and you know that Jerome Powell and the Fed are going to be paying very close attention to that, as it relates to their decisions, as it relates to Fed rates, whether we should cut, stay the same, what's going to happen there. So that comes out on Tuesday. As of right now, if we look at CPI year over year for April, which we will get the report for on Tuesday, the forecast is 2.4%. Previous was 2.4%. Not expecting a lot of change there. If we look at core CPI month over month for April, we are expected to get a slight uptick there. 0.3% is the forecast, previous 0.1%. So that's on Tuesday. On Wednesday, got another Fed speaker. You get crude oil inventories at 10:30, more of a volatile report. And then on Thursday, we get some more action with continuing jobless claims at 8:30. You're going to have core retail sales coming out for the month of April at 8:30. Initial jobless claims at 8:30. I mean, folks, there's a lot going on. And then, Fed Chair Powell speaks at 8:40 a.m. Eastern Time. So that's a lot going on for Thursday. And then on Friday, we're going to get Michigan inflation expectations, Michigan consumer expectations, consumer sentiment. So really, we have a lot going on this week is what I'm trying to get at. There's a lot to pay attention to, and definitely a lot to keep you on your toes. Speaking of Powell, let's zoom in on what the Fed chair might say this week, how the market could react, right? And why his tone matters just as much as the numbers. So Jerome Powell speaking on Thursday. Obviously, we got the rate decision last week, and he decided to keep things the same, even though we all know that President Trump wants a rate cut. At this point in time, Jerome Powell is not doing that. So I found this interesting article on CNBC about how, Jerome Powell might just be a little late here. So according to CNBC, Powell may have a hard time avoiding Trump's too late label, even as Fed chief does the right thing. History suggests that President Donald Trump's new too late nickname for Fed chair, Jerome Powell, has a strong chance of coming true. Fed leaders have been criticized as slow to act absent compelling data showing them something needs to be done. Basically, Powell, according to this article, he's in a no-win situation with threats to both sides of the Fed mandate. And that's why he's doing all he feels like he can do right now, which is nothing. So, obviously Trump wants the rate cut. Jerome Powell doesn't want to give it. There's just too much uncertainty as it relates to fiscal policy right now from the administration in the eyes of Jerome Powell and the Fed that prevents him from taking any monetary policy action and, giving a rate cut. So that's kind of where we're at right now. The president declared there is, quote, virtually no inflation, something that was true for March at least, when the Fed's preferred inflation gauge came in unchanged for the month. However, the president's tariffs have yet to be felt in the real economy, as they are barely a month old. So that's kind of where the Fed's at right now. Obviously, some of the hard data as it relates to inflation looks great, but we don't know how fiscal policy is going to shape up yet with these tariffs. So no preemptive cuts. The 72-year-old Fed chair also dismissed any idea of a preemptive rate cut, despite what sentiment survey data is indicating about current conditions. Powell offered two reasons for not being in a hurry as it relates to rate cuts. The first, no real cost to waiting, according to him. And second, we are not sure what the right thing will be. And so, it's hard to argue against that. He's in a position where, it's hard to see what the impact is going to be yet. He doesn't want to cut prematurely. I get that. Also, the markets would greatly benefit from a rate cut. So as of right now, that's kind of where we're at. Powell has his own particular history of being late, according to this article, with the Fed reluctant to hike when inflation began spiking in 2021. He and his colleagues labeled that episode transitory, a call that came back to haunt them when they had to institute a series of historically aggressive hikes that still have not brought inflation back to the central bank's 2% target. All eyes and ears are going to be on that to see what he says. Is he going to take a dovish approach or a more hawkish approach? Just to clarify those two terms, in case you don't know, a dovish approach would be one lending towards rate cuts, lowering rates, right? And then you have the other side of that, which is going to be a hawkish approach where, the Fed is inclined to keep rates the same or hike them even, right? And so really we're looking for some dovish comments out of Jerome Powell on Thursday. Me personally, I'm not expecting a whole lot in the way of dovish talk from Jerome Powell, especially in light of everything he said last week. I mean, we haven't really had a whole lot change between then and now, or, when he'll be speaking on Thursday. So I'm not really expecting a whole lot there, but hey, let's see what happens. So while inflation and the Fed dominate headlines, there's also a major global story developing. Could the U.S. and China be striking a new trade deal? Let's take a closer look. So obviously we had the U.S. and China meeting in Geneva this weekend for their preliminary trade talks, essentially. And based off of what we're seeing here, they went quite well, which is great news for the markets. According to CNBC, U.S. trade talks with China were, quote, productive, Bessent says. So Treasury Secretary Scott Bessent said that U.S.-China trade talks in Geneva over the weekend were, quote, productive. He said he would give more details in a complete briefing on Monday morning. He also added that President Trump is fully informed about the discussions. Very, very interesting. I heard they had a 10-hour discussion on Saturday. They were back at it again on Sunday, which originally wasn't planned, I don't believe. I think originally the idea was they would just meet on Saturday. So back-to-back meetings is a good sign. And according to this article from Reuters, U.S. officials say deal struck to cut China trade deficit. Details on Monday. This one's a bit more informative. Very interesting indeed. U.S. Treasury Secretary Scott Bessent and Trade Representative Jamieson Greer said on Sunday they reached a deal with China to cut the U.S. trade deficit, describing, quote, substantial progress in high-stakes talks with Chinese officials, but offering no details as 2 days of negotiations concluded in Geneva. Bessent told reporters the details would be announced on Monday and that U.S. President Donald Trump was fully aware of the results of the productive talks with Chinese Vice Premier Hai Lifeng and 2 Chinese vice ministers. Very, very interesting, folks. Bessent and Greer did not mention any plans to cut punishing U.S. tariffs of 145% on Chinese goods and China's 125% tariffs on U.S. goods. They took no questions from reporters. So it sounds like we have some positive news as it relates to that trade deficit based off of what they're telling us. And we're going to get more details about this on Monday. This is very interesting to me because it's starting to seem that the media has really pumped up this narrative that, hey, these talks are never going to happen. They hate each other. Folks, they just had back-to-back meetings over the weekend. And at least from our side of the table, we're describing the talks as very good, very positive, and they seemingly have some good news to announce, which we'll get tomorrow, according to this article. So that is very interesting. I'd be curious to hear what the China side of the table is saying. I haven't seen anything on that, but this is major. This has been the thing that has been holding up the market. We got the UK deal last week, which was great, but really the markets are waiting for this China deal or, just the talks to begin, right? And we got that this weekend, which is massive. So I'm very, very curious to see what President Trump has to say tomorrow as it relates to these negotiations with China over the weekend. So we will definitely be keeping tabs on this to see what comes of it. Now shifting gears to one of the market's most watched names, Tesla. Yes, Tesla. It's had some interesting movement lately. So let's check the pulse on this stock. So if I pull up Tesla, Friday was very interesting. This stock has basically been held below 290 for over a week now. We had the 200-day moving average at 293. And so 290 was a level of resistance for Tesla. And basically on Friday, we got this volume push up and we finally broke above it. And thankfully for me, I had some calls on it, was able to make some money, which is always nice. And it seems to be making some technical moves. For those on YouTube, I'm looking at a 10-day, 30-minute chart of it right now. And, it's looking very bullish. We had a nice 30-minute candle right off the open last Friday with a clear break above 300, pushed as high as 307, and gave a little bit of that back, but we are toying with 300. We are above 290, which in my opinion is an important breakthrough. And here's how I look at it from a technical standpoint. When you have a key level of resistance and then you have a key break above it on volume, right? That's the key word there. The volume shows the conviction, and this is a case in point of that we saw on Friday. You got this push above, massive volume, right? And we held it. We didn't give it all back. We didn't, it wasn't a bull trap. We didn't go below it. We held it, right? And so really looking at Tesla right now, it looks pretty good to me. The way that candle, the daily candle closed, could have been better, but hey, we technically did close above the 200-day moving average. So as far as like next levels of resistance that I would be looking at on this one, I would say 330 is going to be the next level of resistance for Tesla that I would be looking at. If we can get above that, then I would be very, very curious at 350. We have some resistance at 360, but I don't think we're going to get all of that this week unless, Trump comes out tomorrow and says, hey, no tariffs on China, we got a deal, or Elon says he invented something new. But otherwise, just from a technical standpoint, it looks pretty good. From a fundamental standpoint, obviously we all know the struggles that, Tesla has been having of late, with Elon Musk's political affiliations, declining sales overseas, things like that. But you also have to keep in mind with this company that, you got a lot of things in the works as far as the future goes, right? AI, robots, things like that. Speaking of AI, OpenAI Sam Altman reached out to Elon Musk amid ongoing social spat. I saw this headline here, quote, "Let's be friends." Isn't that cute? So let's see what comes of that. If Elon and Sam Altman are able to kind of mend whatever this social media spat has been, and I don't know, maybe come together and benefit one another, that'd be kind of interesting. But as far as the long-term prospects of Tesla, I think there's a lot of reasons to be bullish. From a technical standpoint, we were oversold at the beginning of March. We've had this chop in here due to tariffs and whatnot, but now it seems over the past couple weeks, we're starting to get some buyers stepping back in. And obviously, as I mentioned, we had that clear break above 300 on Friday. I'll be very curious to see what Monday looks like. If we get a bullish open, if we could continue to get some of that momentum pushing higher. So another key name to watch this week is Walmart. With earnings on deck, what they report could tell us a lot about consumer health and the broader economy. So Walmart is set to report its earnings this week, and it's really just an excellent gauge on how consumers are feeling, right? Walmart is a juggernaut, and it's definitely one that we should be paying attention to. They report Thursday, May 15th. This is considered the most important consumer earnings report of the season. Very, very important. Analysts will focus on Walmart's inventory levels, pricing strategies, and commentary on tariffs and consumer demand trends. So that comes out on Thursday. So, and interestingly, Walmart will be reporting the same day that we're going to get retail sales. So definitely something to pay attention to. Some other notable earnings this week. You get Cisco Systems. They report this week. Investors are watching for updates on their AI infrastructure and enterprise spending trends. Applied Materials reports Thursday as well. A key player in the semiconductor space. Its results may, offer insights into chip demand and AI-related capital expenditures. And then Take-Two Interactive also reports this week, coinciding with the promotion of a new Grand Theft Auto game. That's fun. This report is expected to shed light on gaming sector momentum. As far as key international reports, you're going to get Alibaba, JD.com, Oklo. I mean, those are some big ones right there. So basically this week's earnings are, coming amidst a heightened market sensitivity, of course, to the U.S.-China situation. So I want to see, as I've said before, are these companies, when they're reporting, are they giving guidance or are they pulling guidance? Now, if we get some new developments, as it seems we will with China, that might change things at the last minute if companies were going to be hesitant to give guidance and now will. But Walmart for sure is going to be an important one to pay attention to. Again, one of the biggest companies and definitely a great insight into the consumer and how the consumer is spending. So with all that on the table, you got CPI, you got Jerome Powell, Tesla, Walmart. Let's wrap it up with a few final thoughts and strategies for essentially how to approach the market for the coming week, right? So as far as I'm viewing it, and take this for what it's worth, I'm just some dude on YouTube, but as far as I'm concerned, if you are a day trader, right, heading into the market tomorrow, you need to be mindful of the fact that we are going to get an update on the China situation. As of right now, the futures markets look great. I mean, you got the S&P 500 E-mini future currently up 1.24%. You got the NASDAQ up 1.63%. So futures markets right now are up big. Not to mention you got Bitcoin at just over 104,000 right now. So as far as the futures markets are concerned, things are up big right now. And that is primarily due to this news about China and U.S. and the promising negotiations, the beginnings of negotiations that they had. And the news we'll get about that tomorrow. So it looks like it's going to be bullish heading into the open tomorrow for the cash open. So that's great. But if you're a day trader, you got to be mindful of the news when that's going to come out. I'm not exactly sure if it's going to be a press conference at 9 a.m., 10 a.m., right? But depending upon that time, you need to be mindful of that. For me personally, I think I would be inclined to kind of sit on the sidelines, wait for that news to drop and see how the market takes it, right? But it could be super bullish and you could, entirely miss the move. So, but either way, I think wisdom says to kind of wait and see there. For, any swing traders out there, I would say with this week, obviously, you got the China news tomorrow. You got CPI coming out on Tuesday. You got Jerome Powell speaking on Thursday. So if you are swinging positions overnight, you are taking on some risk there. You need to be mindful of that, especially considering the fact that CPI is going to come out before the bell. So if you're swinging a position into Tuesday and we get a bad CPI report and you got calls or something like that, you're going to be negatively impacted most likely. So just be mindful of that. And then obviously with Jerome speaking on Thursday. So still some heightened volatility. VIX is above 20 technically, although it is coming down. So definitely something to pay attention to. Stay vigilant, as I always like to say. But yeah, so let me know what your thoughts are. Definitely want to kind of keep a high level here. But also we need some practical ways to move about the markets this week. And I think with the economic data coming out, that can help you plan your trades, right? Around some of those key events that will be happening. Make sure to leave a comment. Let me know what your thoughts are on CPI, Powell, if you're playing Walmart, right? Or Tesla for that matter. Let me know what your thoughts are on that. Quick reminder, I did drop part 2 of the Intelligent Investor mini series yesterday. So if you haven't checked that out yet, make sure to do so. Part 3 will be next week, where we apply Benjamin Graham's philosophy using the help of ChatGPT to today's inflation and bond rates, so we can actually, practically look for some of these longer term investments if that's something you're into. Other than that, I will be back midweek for a check-in post CPI and right before we get Jerome Powell, and hopefully with an update on this whole US-China situation that we should be getting tomorrow. So looking forward to that. Thank you for the support. And as always, folks, remember, plan the trade and trade the plan. Have a good night.